to this very important event of the Nungu Business School, where we will be doing an X-ray of the budget of the federal government of Nigeria 2024. In a short while, we will kickstart the program. In exactly 60 seconds from now, we'll start the program. So in exactly 60 seconds, we'll start the program, and we will take a we'll do a critical analysis as well as a diving into the budgets and look at the issues and also look at the opportunity that actually exists within the budgets for businesses in Nigeria. And to do that for us this morning, we have Dr. Mohammed Salahuddin, who is an economist. And I mean, not rightly so, because this has to do with economics. And we have to look at every facet of the economy as it relates to the budget and how it pertains to every business undertaking in the country. And this will take us between 45 minutes to 50 minutes of presentations. We will take questions in between. We ask that as you notice your question, you put them into the chat box, and it will be coordinated by our secretaries at the back end, and that will be presented to Dr. Mohammed, that he will take on the questions as we at the end of his presentation. He will be supported by other faculties from the Nungu Business School that will assist with this. So please sit tight and enjoy the function as I have the privilege to invite Dr. Mohammed Salahuddin for his presentation on the budget 2024. Dr. Mohammed, please.
Thank you very much. I'll just quickly share my slides so we can go right into the program. Thank you. Thank you once again. Like I said, a brief highlight will give us an idea of we want to quickly look at what was it exactly that the country did at the beginning of the year, 2023, up until the time that we had a government changeover and beginning to experience some reforms in the economy. So we need to do a deep dive into what happened in 2023. Was the major activities in 2023 are the determinants of reforms, and much more details into the activities of 2023 and forecast and plan for 2024. So more of what we're going to be reviewing is what the economy was like in 2023. And we now begin to look at the budget that was planned for the reform that are planned by the government in 2024. The first place to start is to look at the contribution, look at our Nigerian economy and each sector contributions to the economy between 2021 and 2023. This will give us a kind of a background to which part of the economy is doing well and which part is not doing well. I guess we can all hear me.
Loud and clear, sir.
Thank you.
Yes, sir.
Yeah, I don't want to bore you with more details, though the figures and numbers and data that I'll be presenting are coming from Nigerian Bureau of Statistics, from the Central Bank of Nigeria, some of them from World Banks, some of them from other agencies of governments. Locally and internationally, they give us an idea into it. But then, just brief highlights. We have been able to identify subsectors of the economy that contributed to business and economic growth between 2021 and 2023. But if you look at the agriculture sector, information and communication sector, in terms of information technology, then financial services, the growth and contribution were high. But if you now look at oil and gas, transportation and social services, among others, those ones are low, which means we begin to see the areas in the last 3 years that have contributed and added value to the Nigerian economy. So this gives us an idea of things that the government needs to do And individuals and corporate organizations also need to focus more and open up for business. At the early part of 2023, some of the macroeconomic indicators for Nigeria were all deteriorating in some cases. Some of them are deteriorating rapidly. In determining economic growth or economic development and in any part of the world, the first 2 or 3 things that you look at is the GDP growth, the inflation rate, and the deficit in terms of budget. Then you begin to look at some others that are not major, though very important. Then begin to look at other sectors like employment or unemployment. Begin to look at investments and market shares in terms of stock markets and contributions to the economy in terms of business activities, investment and development areas. Looking at this graph is very simple. If you look at the red points, these red dotted lines that you see are the position of Nigeria at the end of 2022. And going to 2023, some of them are getting worse. Look at the GDP, it's declining. We ended 2022 with 3.3% increase in GDP. Inflation rate was going as up as we ended the year with 18.8. Sometimes in 2023, we got to over 21% inflation, which means what you bought the previous year has gone up by 21%. And we begin to see fiscal deficit in terms of what we spend money. This fiscal deficit in terms of percentage of GDP. And that's begin to grow from 5.0 in 2022. At some point in 2023, it got to 6.4. And we begin to look at forecasts in 2023, rather, and begin 2024 is like to go to 6.1, which means it will begin to decline and come down by this year. This means that the deficit in our budget, we spend more money trying to manage our debt. We are not able to meet whatever we have planned for in terms of our budget for the year. And public debt service, we now look at our debts. Our debts keep going up. We ended the debt 101.6 in 2022, gone up to 171.9. These are percentage growths. So it is expected that we'll still borrow more money to be able to sustain this economy for quite some time. Then we begin to get development for us to be able to grow the economy. Then some reforms were introduced by May, June. The first thing that was done by the new government was to remove fuel subsidy, petrol subsidy rather. Because we were spending so much money, we were spending like 2.2% of our GDP on subsidy. That was what happened in 2022. Highly regressive because we have so much money. And the subsidy also reduced the overall revenue transfer to the federation account because we don't have much more money to give to states and local governments for them to engage in their development programs. We couldn't build any infrastructure because we're spending so much money on subsidy. And this subsidy is just subsidizing the privileged few, not actually getting to the people that are supposed to be subsidized. And this has been happening for quite a long time. So while other countries of the world were benefiting from global oil price increase, we weren't benefiting because our refineries were not working and we're subsidizing what we're importing with dollars. So we're spending so much dollar, wasting our money. So immediately the new government came in, they removed subsidy. Day one. Then our FX management, foreign exchange management, there was a reform there. We had so many windows. Then what the government did was to collapse it into NAFEMS. So the NAFEMS is the only official window. And central bank begin to clear the backlog of excess foreign exchange obligation to people like the airline owners, international airline owners, and some other obligations that we're supposed to pay back whatever debt or borrowing that we made. Then there were some restrictions that were lifted in terms of some products that were importation. Those borders were open and there were restrictions that were lifted. So when these things were done, then quite a lot of things begin to change. So what's the implication? So what some of the things that the reform did was to begin to jack up some stages of our GDP. We begin to see some growth in GDP. So it's expected that at the end of 2023, forecast system, we don't have the figures and numbers now. We expect that we'll get 2.9. Ordinarily, it will have been the red dotted lines. If you look at the graph on the left showing about the real GDP. But we see what we see, the dark blue, which may appear to you as black, as against the red dotted line, the graph begins to look up north. So there's a gap between GDP, if no reform, and immediately we started the reform, you can see the graphs looking up. The same thing with inflation. The inflation will have been much more higher than what we see now if the reforms were not made. Though we have challenge, it's still not the best because it went up as 24% at some point, came down, and now begin to go up again as we see the inflation figure for December. The same thing with fiscal deficit and adopted public debts. Our debt begin to go down after the reform were done, and we expect that into the future it will continue to go down in 2024, 2025. That's the expectation, because we can't go back to those reforms of the old, and certainly things will change. It may not be immediate. We begin to see positive change by the middle of the year, 2024, towards the end of the year, 2024, and deep down into 2025, things may begin to get better marginally. So some of the pains that we experienced from the reform during the reform, if you look at April 2023 on this graph, we were subsidizing fuel up until like June. Immediately, the government stopped subsidy after swearing in May. The fuel price jumped on average. We have an average of close to about 200 naira before. That's the national average. But you see by October 2023, it has jumped to over 600. If you look at the national average now, it's over 700. This gives us an idea of sharp rise in the prices. These are some of the challenges that the consumers had to face. In the exchange rate also, the thick blue line is what we've been enjoying, which means the official NAFEM rates jumped, were steady. Between the light blue line and the dark one, you can see the difference. A little bit over 400. That's the official exchange rate for Naira against dollar. Then, while the parallel market rate was close to over 700, very close to between 750, 760. But immediately after the reform, we begin to see jump in the currency. Look at the parallel market rate. Today we know it's over 1,300. And the NAFEM rate also jumps. As at November 3rd, it has jumped to over 1,500. While the parallel market rate has jumped to over 1,100 and over 200 at the official market, at the parallel market. So these are some of the things that happens which are painful from the reform, but we must go through this pain for us to get things to get better. So have a look at those two major factors that drive economy and the actions that were taken by government during the period to manage this economy and make sure we remove subsidy on fuel and harmonize all the markets and the windows that we have for foreign exchange just to NAFEM and which compare also with parallel markets. It makes it a little bit difficult. So let's look at the CPI inflation year on year, starting from 2018. This is intended to compare what is it inflation in Nigeria compared to countries like Kenya, South Africa, and the United States. The list you see there is inflation in the United States, which is less than 3%. And if you go to South Africa, it's a little bit above 5%, between 5.5% to 6%. If you now go to Kenya, you see the Kenyan rate is still around 7-8%. At some point in March 2023, it goes up to close to 10%. But look at the Nigerian inflation rate. It's the one on red on top there. So this gives us an idea of what we've been going through since 2018. It means we are above all those key countries in Africa and the United States in terms of our inflation rate has been up, even when experts have been even clamoring on the rates at which we look at inflation and it's still higher than looking at it globally. Then let's look at the cost of living, the pressure and the poverty rates. This gives us an idea of between 2021 and 2023. How is cost of living? If you earn an X salary of like 100,000, for instance, how much more of food can you buy? How has things jumped up in terms of rent, in terms of transportation? How is it more expensive for you to live? Let's look at food, because food inflation is usually the major driver of inflation. If you look at inflation today, the food inflation is over 30%. And the food inflation is one that affects everybody. If you look at 2022, if you look at the jump, the red line, maize per kilogram has jumped by 238 naira per kilogram between 2021, 2022, and 2023. Between 2022 actually and 2023, it has jumped 238 naira, additional 238 naira for you to buy a kilo of rice. For rice, a kilo of maize rather, for rice is 324 naira higher. And for petrol, actually 435 naira higher. So which means the cost at which individual household lives has gone up. The implication of that is either you're not able to meet your basic needs, and indirectly it means people begin to get poorer. So let's look at the poverty level on the right side. So we see 104 million Nigerians in 2023 become more poorer. This is from World Bank and Nigerian Bureau of Statistics. Some others body do not agree with 104. Others say it's 133 million Nigerians. But let's use the figures and numbers that we have for the base of facts. So year in, year out, more and more people begin to fall into poverty. Between 2021 to 2022, we see poverty jump from 95 million to 100 million. Between 2022 to 2023, 104 million more people, 104 million people are now becoming poorer by the day. And these are the things that put pressure on the citizen, the nations, an ability for country not to be able to do a lot of things that ordinarily they should have been able to do. And that's why they now begin to ask for palliative. People now begin to ask for support. People now begin to turn to beggars to be able to survive. So let's look at those things that contributed to the GDP, as poor as they are. We look at it looking at on two bases. First, we know that crude oil is the major revenue driver of Nigerian economy. Whether we like it or not, it contributes huge amounts to our revenue, over 85%. But the non-oil revenue side is also coming up in terms of volume and giving us much more percentage of GDP. So non-oil GDP growth has been consistently positive, while the oil sector has been constantly a drag on the growth, which means the oil is not bringing the growth that is necessary, but gives you the revenue. But the non-oil sector is giving you the growth that is required, but the revenue is not huge. So the real GDP is what you see in the red line connecting all this dark blue line and the light blue bars that you see. And we look at them from Q1 2022 to Q3 2023, gives you an idea of sectoral contribution to GDP. We have the Federal Account Allocation Committee revenue remains very flat to GDP, which means because of FX unification, that's foreign exchange unification, has created a windfall for federal revenues. But a lot of deductions, which are lower than the expected gain from the subsidy removal, have kept revenue constantly in percentage of GDP terms very, very low. Invariably, what this tells us is that we have slight growth in GDP, but those slight growth are not giving us enough money to be able to give to states for them to develop their infrastructure and for the country as a nation at the national level to be able to take care of the basic needs. So this contribution is not making redistribution of income at the macro level even for people to benefit. That's the simple interpretation of this. But what was the government doing? What were we doing? Between 2022, 2023, and I'm getting to 2024 now that we expect. So financial needs elevated through ways and means. I just want to explain here that in recent years, Nigeria has filled financial gaps through contracting ways and means financing from. Ways and means simply means printing currency in simple layman's terms. Officially, by law, a country is not supposed to, Nigeria, the countries are not supposed to print more than 5% of our annual revenue through the CBN in terms of printing money. But we go and get a special approval without even going to the National Assembly officially. Though we go and we get it through the back door and say, we increase it. We actually increase our own up to 15%. We're just printing money. All of us recall the experience with trying to Naira change in Naira to new one to old one, stop whatever, all in the name of trying to reduce liquidity in the Nigerian market. Unfortunately, it didn't work because most of these Naira and people's homes, they are not into the banking system. And these are the things that fuel inflation. When you have too much money in circulation, the effort of government to bring back this money to central bank did not work because a lot of the money are not in the banking system. They are outside the banking. So a lot of people that have money kept the money home or somewhere else. Not where we've seen photographs and videos of people keeping money in their homes, putting air condition and rotting money and the rest. Those are the things that fuel inflation. So what this does is to make Nigeria to be breaking all the rules. To give us budget imbalance. Our federal fiscal balances is upturned. So we need to change the way we do the ways and means so that, because ways and means trigger inflation indirectly. Because you now have too much money in circulation. The previous government printed out 47 trillion naira. These governments have spent over 7 trillion already. And the more money you print and put the money in circulation, the higher the cost of goods will be. The simple definition, like everybody knows, the layman definition of inflation is too much money chasing few goods. So when you have too much money in circulation, yeah, it's highly likely that the inflation will go up. So it is important that it is important, highly important for us to be able to grow Nigerian economy, the revenue, both in the oil sector and the non-oil sector. For the non-oil sector, the growth is happening, but the revenue is not coming like we expect it to. And the oil, the revenue is high, even though we're not benefiting fully because we're not even producing enough in terms of our location for us to produce, because our brothers in Niger Delta and some other people are stealing the oil. We couldn't produce as much as even OPEC allowed us to produce. We're barely producing 1.3 million barrels per day, and we have a quota to do 1.8 up to 2 million. We couldn't do it, and we're losing money. Unfortunately for us, at the time we were asked to do all this in between 2022 and 2023, and now, oil price has been very stable and has been going up. Other countries and nations that are oil producing in the world are benefiting, but we are not. So we see that non-oil sector in terms of economic growth, in terms of revenue, are beginning to get up. Non-oil sector is beginning to go up, but the oil sector in terms of revenue has been stable. It's not been increasing. Though big, but not been increasing. So this is percentage growth. This is not the quantum of money coming into that. So you can see the average in 2022, just standing there, very close to 18%. And let's now look at the difference between the forex markets, foreign exchange markets before the reform in May and after the reform. So we actually have a gap between the parallel market and the official market rate at 60% before the, then this gap closed immediately after the reform, which means there's been an improvement in closing the gap between the parallel markets and the official markets. A lot of people will not feel it, but the implication is that more and more people now have a focus where to go and look for my money, where to go and look for forex to do business. It's either you go to parallel market or you go to NAFEX, which is the official window. So the gap that has reduced is better, but we need to close the gap the more. 20 to 40% is still high. You can bring it to about 5–10%, which is good. But 60% is a no-no. These are some of the things that change after a while. So what's the true price of PMS? That's petrol now. And the true price of petrol is a function of the forex rate. Because the forex rate, we still import finished products, finished petrol. So if you are importing petrol, which means you are spending a lot of dollar to bring it in, because petrol is not sold in Naira. So during the period, the official rates estimates indicate that the pump price with full cost recovery would have been around 751 Naira per liter by end of October. That's last year. So the blue line will have actually been cost of petrol using the FX market, the dollar rate. So what this thing tells us indirectly is that as it is today, there's still some subsidy on petrol. The dotted blue line, light blue line, is what we currently have today. But the dark line is what we should have considering the FX dollar rate, which means there's still some little bit of subsidy. Though not in part of the budget for 2024. The guess is that NNPC is absorbing that subsidy and calling it debts in their books. That's the guess. Because they're the only one that imports petrol. So if they're the only one that imports petrol, they can as well say, sell it to the marketers at X price, buying it as X minus. So the difference between that goes into their books as losses. So by the time they are declaring losses, that losses they're declaring in NNPC limited. The NNPC is limited. By the time they are declaring losses in NNPC limited, those losses are the subsidy that the government should have paid. So it's being warehoused. No, we have looked at last year. We've looked at how the economy have changed, how it was at the beginning of the year. Now look at the factors from inflation to GDP to forex markets and the determinants of the economy for greater part of last year. So, but we now begin to look at things that we need to do completely differently to secure the benefits of critical reforms. So things we need to do completely different. Those reforms that were done, there much more need to be done. Because we're done in few areas, there need to be more that will be done. But those are the major determinants of our income. To bring in investments, there must be some other factors that must come in place. Let's look at those things now. So the new FX policy, we have seen it. The key benefit is that it corrects overall FX rate and external imbalance. We resolve FX assets problem by allowing prices to adjust based on FX supply and demand. Though the risk that inflation keeps increasing. Because as it is, it looks like Naira is still overvalued, which is generating pressure to depreciation. So which means it's expected that we should depreciate the Naira more. Though the challenge is that it's going to take up inflation. And more capital will be required in the business for people to be able to do the business they currently do today. So those are some of the implications of what will happen if we do that. So what is recommended is that we should tighten monetary policy further. Some of the things we should do in monetary policy is to communicate the plan very swiftly to all those that are concerned. And all these things that CBN is doing, getting in terms of financing scheme for people supporting agriculture, they should leave that. They should do core banking and leave that for businesses to do. It is important also that we build market confidence for FX markets, so that we channel more of our activities to nothing, so that we concentrate on nothing. Because people seem to get some special rates to do some special thing. It shouldn't be like that. Everybody should go to the market to do the same thing. It should be so that it can be determined by the cost of supply and demand. Airlines we are owing a lot of international airlines, forex, they are not able to repatriate. A lot of services that were rendered were not that supposed to be paid in dollars, were supposed to still hanging. So it is important that we begin to look at this policy on FX such that investor can be able to come in. Because if you come in as an investor, a foreign investor, put your business here and you are not able to repatriate your profit back home, you're not going to come. And businesses that need USD to do business will not have access to it. Whether they have access to it, they may not be able to get enough. So they have to go to parallel market to buy at higher rates. Things will go up in terms of price. That's inflation. Then we should also do cost-reflective petrol pricing. A lot of us will not like this, but the key benefits is stabilize the fiscal situation by increasing net oil revenue. If you do it, that's going to be the benefits. The revenue that we require to run this economy, the budget of 2024, we don't have money to run that budget. That's why they're increasing tax and so many other ways to begin to look for money to finance the budget. Unfortunately, we are still going to borrow money to finance that budget. So the risk there is that if we put exact cost of petrol so the price is still too low, the risk is that cost of things will still go up. That's the implication of doing that. But with more revenue, we ensure that there will be clarity on how price of pump price are fixed by the marketers. Everybody fixes his own price. Because people are still looking at NNPC to fix price now. The price of petrol in Lagos is not reflective of the exact amount that it's supposed to be because of the dollar rates. So if you look at dollar rate vis-a-vis what we're selling for fuel, what we're buying fuel, I think it should be more higher than that, even though we are going to be feel more pain. And it's important for NNPC to be much more transparent, because they are not transparent. Because it shouldn't be only NNPC that will bring in fuel to Nigeria. But I'm sure government is using that so that they'll be able to give us additional subsidy to buy it at these rates. So for non-oil revenue to be better and turn around the non-oil revenue, if we can begin to give businesses some tax holidays, some exemption from some business in terms of tax for VAT, even for petrol, and begin to look at the style of taxing as against inability to rationalize tax expenditures. One should be able to, so, and tax administration should also be getting better. As against everybody paying the same kind of tax, the rich should be paying more. And this thing should be done much more seamlessly and faster, because tax is another way to raise money. I'm sure in subsequent whatever, we'll see how tax has increased in terms of collection, because the man at the helm of affairs now is a real tax collector. So some of the things that we need to now address is to look at the barrier. The barrier in growth and investment must be addressed. So we must implement and improve power and transport infrastructure. Look, if you have power in the right place, improve public service delivery, security improves in the country, and the business environment is much more friendly. This will definitely raise our growth prospects as a country. And those restrictions in terms of trade, we need to look at them to grow investments and to grow the economy. Review some of those tariffs. Some people pay so many different taxes. You pay for local government, you pay for community, you pay for the market tax, you pay so many taxes. It should be harmonized so that there will be central pool. And there should be a way to collect it using appropriate way of doing it to avoid leakages, because there's a lot of leakages. And we should be able to block all logistic aspects of it that are funny. So the port operation and activities of the port also need to be better so that we can bringing in product and taking out product out of the country can be seamless to reduce congestion. So let's look at reforms that are done and those that need to be done very quickly. We've seen petrol subsidy, we've seen exchange aid, we've seen the removal of the items, starting the items from the first restriction. If you want to bring in those items, don't get it. So removal of those ones. And we begin to tighten monetary economy. So those are 4 major things that were done. And we've seen reforms that need to be done. For us to be able to get desirable, there's still more to be done. Anyway, we need to control inflation and stabilize the FX market. We need to find more revenue. It's important to have more revenue so that we can run our own economy without borrowing. The beauty of growing revenue is to run our economy, finance our budget without borrowing. Because the more we borrow, the more we run into debt. A lot of debts that some of this generation will not be able to pay. And in the process, grow the economy. So like I said, in growing the economy for year 2024, there are some policy recommendations that we need to do the first 6 months of this year. I guess if you just look at the headline, curbing inflation and stabilizing the FX market, creating more fiscal space, addressing structural barrier to growth. Some of those structural barriers are laws, are tariffs and taxes. And more fiscal space is for us to raise non-oil revenue and look at VATs, give some people holidays, NMPC to be more open. And curbing inflation is to make sure we have stabilized the market. NMP, both fiscally and fiscal policies can reduce inflation, and CBN can also help reduce inflation by mopping up excess liquidity in the market. Excess liquidity by going to the bank, asking them to increase their rate, which they've done severally. But then it's not working fine because a lot of money are outside the banking sector. So let's look at year 2024. It has to be macroeconomic outlook. And let's look at the guide for that year. Globally, international assumptions were made by, I think, from World Bank. Look at 2023 to 2028 forecast. First, economic growth, then inflation, then financial variables. With US, we see advanced countries, in terms of growth, they don't grow largely in terms of huge growth anymore because they've been growing over time. Between 2023 to 2028, it is not likely that even the US GDP will grow. 2023 it is forecasted that it will grow 2%. This year, it's expected that the US economy will actually have to drop to less than even 1%. Because of activities, US, there's going to be election, they're engaged in war in everywhere, everybody's fighting, they are joining them to fight. So it's affecting the economy, and they are pumping so much money. That's there. So developed economies, other developed economies apart from the United States. You can see there's none of the developed economies that's going to grow more than 1.8%. And that's going to start from 2026, actually. So this year, they're not going to grow more than 1.1%. And the world at large is forecast, the forecast says that 2.2 growth is what we're going to see. And the maximum in terms of rate, trade, be 2.7%, which means trade among nations will drop in 2024. Look at trade among nations in 2023, just 7%, which means more and more nations are no longer trading. There's war in Ukraine and in Russia. There's a problem with Israel and Palestine. So these are affecting business of the world. And if you look at inflation, inflation is going between 4% in 2023 to 2.5% in 2024, which means inflation rate is going to be declining for developed nations. So this is a picture of what is going to happen in oil price is still in the 80s for this year and begin to drop next year. So that's the forecast. So these are assumptions of what's happening outside the world. Let's look at Nigerian economic forecast for 2024. It is expected that the Nigerian headline economic forecast 2024 that GDP will grow 3.25. Our population officially will be 200 million. Trade balance is expected to be 3.2 billion against US dollars, which means the rate at which we trade with other people and then the other people trade with us. Foreign reserve should go to 20 billion, which means we have chopped a lot of this foreign reserve because we're using our reserve to give dollar out to people to pay debts. Total debt is going to 135 billion US dollars. So which means we're going to borrow more and more money. Part of the money we're going to be borrowing is to finance our budget actually. So unemployment rate, which means 50% of Nigerian that are employable rate and of employable age, 50% of Nigeria will not have job. So inflation 25.5. Already we have seen 28.92. The open market operation with the banks and the financial system with the banks is going up to 26.5 in terms of rates. So if you look at this forecast, it paints a little bit of gloomy picture, but fairly better than what we experienced in 2023. So Nigeria accounts for 18% of the sub-Saharan African GDP, as well as 20% of the region's population. Nigerian economy, like we know, is still dependent on oil. It's our major export and the major foreign exchange earner. Actually, 95% of the economy is driven by crude oil. So at the end of the year, 2024, the forecast is that our GDP in terms of dollar will be 390 billion. In this country, at some points, we have made 500 billion before, which means we're not growing in terms of GDP. Now, expected to be 390 billion. So this is forecast for 2024. It's on this basis of this forecast that Nigerian plan the budget. Let's try to compare 2023 and 2024 and see the changes, which means GDP will grow 3.3, so it's going to be 0.69% increase. The potential is that we have what it takes to grow the GDP by 4.9. What can we do better? If we stop insecurity, give power can improve, and just insecurity, this GDP will grow. It's a major determinant. So GDP per capita, we're losing it, which means individual with money in terms of capital outlay, individual, household, and at macro level. Indirectly, it means that more and more people are going to be poor. Total factor productivity. The productivity level is going to go up. That's what this version tells us. If you look at the inflation, we've seen 28.7 at the end of the year. Already we have seen much more higher inflation rates now. It's expected that the forecast is going to decline towards the end of this year. So if inflation go up, it's better for us towards the end of the year, which means we now begin to have disposable income to buy more things. Money supply, in terms of it, we're going to have money supply in the economy. And other factors in terms of financing, mopping up operations in the banking system, the fiscal policies are going to get better by 5.1%. Now looking at the fiscal deficit as a percentage of the GDP, it's expected to decline. External debt, like I said, we need to borrow more money this year to finance our budget. So our current account balance is going to be 22.5%, which is positive and better than what we experienced last year. Trading balance, like we said earlier on, is going to go up, jump hugely. This is good news in the sense that we'll be doing more exports to earn more dollars than we did last year. And the exchange rate that we see at an average of 8.48 last year to dollar is likely going to go up to 9.50 officially. So this tells us that whatever exchange that we have in terms of dollar now, it is likely going to go up until we begin to produce something that is going to give us more export capability, and bring in more dollars into the country. Even diaspora funds that were jumping up, unfortunately, it's not going through the banking system, because individuals in diaspora that are sending money are not being able to account for it in the system, because it's not going to CBN because of this policy anyway, which means some of those policies need to change for people to take their money to bank. You know, countries of the world like India and China, a lot of their earnings for dollars is diaspora fund. India actually has the highest in the world. So 2024 economic indicators, we have looked at them. We have looked at GDP. We have looked at inflation. We have also looked at the external reserve and the exchange rates. So what's the true value of Naira? How much do you think Naira is worth today? We believe that Naira is actually undervalued by 26.56% at the NAFEM rates. It should have been at NAFEM rate of 1,089.5. At the parallel market, Naira undervalued by 35.73% at the parallel market rate of 1,245. So the beauty of this is that it's important that we begin to look at what is it that's going to give us more forex for us to be able to run the economy efficiently, improve earnings, have enough money to be shared for infrastructure development, and to be able to finance our budgets and reduce debts. So we have seen parallel market rate at 1,245, NAFEM rate at 1,085 per dollar. So it is important that we use this as a basis for us to be able to do our activities for coming years. Which business, what are the macro changes and the sectors that will thrive this year? It is important to look at which sector of the economy will thrive next year. So which business are you doing and what is likely going to happen to that business? Because those macroeconomic changes will affect businesses, will affect the economy as a whole. We talk about price of fuel and actual price of petrol and the rest. Some of the game changers will be that Dangote refinery, because we don't actually have any refinery that's working now. And Dangote refinery seems to be the only one that we have hope. Supposed to start this year by the promise, but as it is, they've received all the 6 batches of crude for them to begin to commence production. What it will do is to increase the supply of refined products to Nigeria. It doesn't mean the price will come down, but at least we're not going to be spending our dollars to buy petrol, import petrol anymore. So at the macro level, it's better for the government. It's going to change in the macroeconomic indices. We're not going to be spending so much money to import petrol again. And it's going to give us some energy security and sector productivity. So every sector that requires productivity to improve, this refinery will guarantee it. So, secondly, road and airports concessioning. It's important that government begin to get out of those areas where they don't have capability. It's a popular saying that the government does not have any business doing business. It's better for us to leave the business in the hands of people that knows how to run the business. Because road concessioning, airport concessioning, to bridge infrastructural gap is important. That if you concession, experts will now begin roads. We've seen Dangote they have done a lot of roads before, concrete roads that have a lifespan of between 20 to 40 years. And some of them are running strong. You don't see people fixing the road regularly. That gives us an idea of, yes, things can happen. Something will be given to the concessioning company in exchange, but give the road to experts to do it, and monitoring it for the experts to run. Electricity Acts. Like I said earlier on, it's important for us to get power right. If there's electricity, the vaporizer can work with public power without buying fuel to power his machine. The welder doesn't have to use a generator to do his job. You have to wait for public power. Industries that are buying diesel and burning a lot of diesel to run their businesses will stop using diesel, even though they are trying to use gas now, but it's not widespread. So this increased investment in electricity can improve access to electricity. We've seen in the new act that states have been allowed to have more than enough megawatts. It used to be like 1 or 2 megawatts they can have. Now it has been improved. So they can actually run their own power plants and commercialize it and make money out of it. So if we're able to do all this major change and continue to manage it effectively, business will begin to thrive. So why other sector will thrive? Which other sectors will thrive today? Manufacturing and trading. The sales of Dangote refined products, petroleum products, is going to boost the growth in the manufacturing and trade sector. Because there will be diesel for operations, like I said earlier on. There will be fuel for those that want to buy fuel. There will be gas. There will be jets, even for airlines, as against importing jet fuel, which will bring down the cost of jet, because cost of jet fuel is actually more than 60% of the total cost of running airline. So this will improve general business. Construction. So increase private sector participation in infrastructure development through roads and airport concessioning, like I said earlier on. And government spending on infrastructure development will drive growth of the sector. So the construction industry will have a lot of job to do. So the sector is a sector that will thrive. Telecoms. The demand for telecom services will remain strong. It has been strong, it will continue to be stronger. A lot of reason for that, because the technology that requires telecom services, especially data, will continue to improve. The technology is improving. There are much and more investment in telecom technologies, and investments growing. So if this is happening, then the sector will still strive, continue to thrive 2024 and beyond. Also, financial services. Increased competition in the sector, divine fintech. We have a lot of fintech coming up. There was a decrease in terms of fintech investment for 2023. AI is becoming challenging to the world, and is part of technology that will begin to thrive and begin to get into, even though it may not get to this part of the world as fast as we think, but then when begin to rampage the entire other part of the world, because we've seen an improvement. The forecast is that it's going to take for about 40% of the job of people in the world, and then which means, but investment will go up. We've been seeing consolidation of a lot of banks and in other part of the world, and financial services across the world. We expect that to be happening in Nigeria also, because you must be strong, be able to stand the tide. So which means financial services will improve, telecom will improve, then agric, this is actually the meat. The major thing is that we need investment in agric, and we need security to make sure that people invest and begin to do business. And exporting agricultural products is a major thing that we need to invest in and encourage people. Government need to encourage that, provide environment and infrastructure for people to be able to produce export products. So these are the sectors that are certainly going to try for next year. We've looked at this. Some of the positive outcomes that will come up again in terms of domestic economy for this year. We have looked at them: inflation, monetary policy. Price of crude oil is expected to go up. There's even an optimistic take that the price of crude oil is expected to go beyond $100. It's expected to be $106 US. I hope we'll be able to benefit and produce more if we're able to take care of the security in the Southeast and those that are stealing the crude. Let's look at budget 2024. I'm going to look at the monetary aspect of it, the fiscal budget, and the market rates. What we intend to do here is just to look at the budget and look at change between what we have now and what we had before. So we know where we're investing money. I mean, when Nigeria wants to put, the government wants to put more money than what they did before. So we want aggregate revenue to jump this year to 18.232 trillion. Last year, we were expecting 11, which means a 66% increase in terms of aggregate revenue. This is going to come from productive activities. Like all those sectors that we say will thrive, will add to those revenue. Agriculture, oil and gas, manufacturing, trade, financial services, telecom, and information. So, and the expenditure that we're looking at is 28.7 billion. Last year was 24.8, so there's an increase of 15.7%. So it's expected that we're going to have a deficit of 10.4 billion against 13.8 billion. So we'll be 24.6% projected deficits. But this budget needs to be funded. And this budget is also based on some assumptions. We assume that the oil price will be an average of 77.96. The crude oil price, 77.96. Currently, it's higher than that, it's about 82. Last year, we based it on $75 per barrel. Last year, we expected that we'd be able to produce 1.72 million barrels per day. We didn't achieve that. But this year, we expect it to 1.78. So there's a huge expectation in terms of production. And we should be able to do it. All we need to do is just to tackle insecurity in the Southeast and activate some oil wells. 52 oil wells were licensed about more than a year ago. Those oil well owners should be encouraged to commence production. Exchange rates based on 700 naira per dollar last year is 800 per dollar this year. Target inflation last year was 17.16. This year is 21.4, which means we expect inflation to go up, even according to the government, which means we begin to see rise in inflation until we be able to stabilize the economy and things get better. Towards the end of 2024, we begin to see a decline in inflation. And 2025 seems to get better from the forecast that we've seen. GDP growth is expected to grow 3.76%. So these are the bases on which the budget were. So where are those budgets? Where are the money going? The expenditure for next year, this year, where are they going? look at what we are paying a lot of debts, services. We're going to spend 8.2 trillion rather, 8.2 trillion to service debts. And only 9.9 for capital expenditure. It's only capital expenditure that can give us more money. Debt is just to finance whatever we have chopped in the past. So it's actually a huge percentage of our revenue that we'll be using to service debts. We still have the current expenditure that we're owing about 8.7, which is far, far greater. It's the reason why we are not having enough money to be able to take care of capital expenditure. So what the budget is saying invariably for this year is that it says continuous time of belt tightening. We budgeted so much money, more than what we did last year. Actually over 7 trillion than last year. And majority of that money actually go to debt servicing and recurrent debts. These two are not going to add value to the development of the economy. What will add value is the 9.9 trillion. That's the capital expenditure. But here we are. We have looked at the businesses that will thrive in spite of all this. And we look at what kind of businesses and macroeconomic indices that government need to take care of for us to get better as we go on in the year. And as part of the budget also, there's a forecast. We have looked at bond, treasury bill, lending rates, maximum lending rate. Most of these are financial and monetary policies that government need to apply and adopt to continue to use it to manage the economy. So the average maximum lending rate is expected to be 29%. It's very, very huge. These are the kind of rates that do not encourage investments. But as it is today, the bank must be able to survive. And the central bank cannot do much than the open market operation that they do, and they mop up liquidities, reduce money that's in the circulation to reduce inflation. But this does not encourage investment by people that want to borrow money from the bank to do investments. NPR, just like we have looked at the other policies, 19.5%. That's the outlook for 2024. So this must continue. Otherwise, the inflation rate is the major challenge with a lot of monetary policy has to do with inflation. What the fiscal policy and monetary policy can do together is to reduce inflation. While investment is being encouraged, the banking system should be able to give people more people money to run business and people to have money and keep a lot of money in the banking system. Those are some of the things that is very, very vital so that we don't have a lot of money outside, and watch money laundering system and get our security to take care of a lot of people that are going to the background to play games. So we should invest in a lot of technology to be able to check activities of charlatans and marauders, that you can call them, that are playing and taking advantage of all the loopholes in the activities of the government to circumvent all the rules, be able to make money. So this gives us an idea of everything we need to do, breaking it down from one stage to the other, looking at the budget, looking at the finances, inflation, GDP growth, and rest. Let's do a sectorial watch list. Which sector is resilient? Which one is unstable? Which one is going to recess in terms of forecast? Some of the sectors that are very, very resilient, like we talk about agriculture, manufacturing, finance and insurance, construction, trade, art, entertainment and recreation, real estate, professional, scientific and technical services, administrative sciences and technical services. These are resilient sectors of the economy, which means we can see a better improvement in the long run. Some of them are mixed, some of them are stable, some of them are still shaky, but by and large, they're still resilient, they're able to survive. Some of them are unstable. Let's look at the unstable ones. Like we've seen electricity, there's a lot of issues. That's why I said earlier on that we must be able to make electricity stable so that people can work and make money. Accommodation and food services is mixed for 2024. We're not sure of what is going to happen. Transportation, the price of fuel may not go down, so it's unstable. We're not sure of anything that's going to happen in terms of transportation because cost of fuel, gas, diesel, petrol. Mining, uptick. Between 2021 and 2023, it's been negative. So we expect that in 2024 is a combination of both positive and negative in between. So at the end of the day, we end up negative because last year it ended up 1.2% year on year in comparison with 2022. So the sector that is likely going to face some recession is the crude petroleum and natural gas. There's not been improved activities in that sector. But if you look at how it ended in 2023, minus 1.7, which is better than how it ended in 2022, minus 19.2. It is likely to survive. If Dangote comes in, Port Harcourt Refinery comes in, we're able to tackle security in area data and we're able to get crude because it took Nigerian government, NBS, to give about 6 or 7 weeks to give 6 million barrels of crude oil to Dangote, which is ordinary. It's something that should be given within a week. So this picture gives us an idea of which sector of the economy will do better, it's resilient, which one is unstable, and which one is likely going to go down. Chances that the sector will go down is the oil and gas. But we have seen water, agricultural, manufacturing, just like we have looked much more details in those sectors that we tried. These are sectors that are likely going to survive this year and beyond. I know there's going to be some question and answer, but I want to conclude without talking about these questions that I have answers for. But I'll wait for whoever wants to ask questions to ask so that we can begin to take it one after the other. Some of them will be here. So in conclusion, Enugu Business School research team expect positive trajectory in macroeconomic indices, which will impact the generality of Nigerians this year. We need to improve power supply, security, and massive farming, in addition to growth in crude oil. This will ease inflation and provide revenue to finance the 2024 budget. I'd like to say thank you very much for listening. Now I'll be ready to take questions. Thank you. Can see two questions already in the chat box. So who's anchoring this, please?
Thank you very much, Dr. Muhammad, for this wonderful presentation. We've received almost 2 commendations for the presentation even before you ended. And yeah, Dr. Okay. And we have 2 questions already. And the first question was looking at the GDP at about 400 million USD. And the questioner is asking, how do we contribute and benefit from this GDP from this huge migration positively for individuals and enterprises? I guess the person posted the question ahead of the sectorial analysis that you did, because your sectorial analysis will have answered that question. The second question is from Saidu Abdullah, and he asks, please, does the Dangote refinery have enough capacity to meet our local demand?
Okay, can I take it?
Yeah, please. Yes, please.
Yeah, the first one is talking about
how do we take advantage? How can the individual and corporate organization take advantage of the 400 billion US GDP?
Well, GDP is not fund or money that's available for us. It's a macroeconomic computation of the growth of the nation in terms of revenue from GDP. We are not growing fine. It's expected that we're going to grow 2.9% for this year. But this 400 billion US dollar is not good enough because, like I said earlier on, we've done over 500 billion before. So if we're expecting 390 billion, about 400 billion, we still need to do, because we're a $1 trillion economy. This economy, Nigerian economy, we're supposed to be doing $1 trillion, not 400 billion. So if we do like $1 trillion, then three things will happen. The inflation rates will drop. We'll be able to pay our debt. We're not going to be anybody. So our budget will not be spending 8 trillion servicing debts. So there'll be a lot of money that can be borrowed to people at a lower percentage than 29% that we have seen. So that is how individuals and businesses can grow. So you say currently federal governments are getting 1 trillion GDP. With 1 trillion, actually, this government promised 10% economic growth when they came in, before they came in, during the transition period. But we all know that it looks like a joke, because the economy does not grow more than 3% in close to 2 decades. We want to turn it to 10%. It's good aspiration. We're currently doing 390 billion. That's expectation. And the government is targeting 1 trillion as GDP. The 1 trillion as GDP is going to take us some decade. But it's not impossible to achieve. So how can individual benefit is, this is not good enough until it gets better, but companies can begin to pay our debts, begin to export a lot of things and begin to make money. That's when we benefit from this. But for now, we are not likely to get any major benefit from it. For Dangote refinery, yes, it can produce enough to meet our local demand and even beyond. It has a 650,000 barrel capacity. It's the single biggest refinery running all full stream. And nobody has that kind of refinery. So if it's going to produce in full capacity, even as it is now, it can take care of our local needs for petrol, for diesel, and for jet fuel that they're going to start with. It's actually going to start with diesel and jet fuel and gas. So it can be taken care of. Any other question, please? I hope I've answered your question anyway.
Thank you very much. Well answered. So to take advantage, if I'm recapping you properly, we need to look at more SME exports as against import, and that will assist with the GDP. Yes, there's another question here. And the questioner is asking, what is the way out of the FX shortage in the economy?
Yes. The major way out of the shortage in the economy is for us to produce enough locally and export. So when you produce and you export, you make more money. And the money you'll be making is going to be in dollars. So the more money you make, the more money comes in, or get foreign direct investment, people that will come and invest in your country and boost the economy. Those are the things that will give us more dollar and reduce the shortage effects.
Thank you very much. Yes, and that is also noted. We need to produce more, take care of our need in-house, and also export. And that way, we will be doing a lot of justice to ourselves and a lot of justice to the economy, rather than being an import-dependent economy. At this note, we want to thank you so much. We want to thank Dr. Mohammed and everyone that has participated actively here today for this review of the budget session. For all those who have registered, we'll make a copy of the presentation available, which we shall send to you via email. We thank you most sincerely for joining us this afternoon. And from our end here, we say good afternoon and thank you for being here. Thank you and goodbye.
Thank you.